Good morning, everyone, and many thanks for joining us for this RRS special event investor webinar. I'm Nicholas Reid from Reid Corporate, and I'm delighted to have the opportunity to introduce one of the rising stars of the Australian gold sector, Bardoc Gold, ASX code BDC, to present to you this morning. Bardoc is well on its way to joining the ranks of ASX-listed gold producers, and it's doing that right in the heart of Western Australia's eastern goldfields, at its namesake 3 million ounce Bardoc Gold Project just north of Kalgoorlie. In March this year, Bardoc delivered a pre-feasibility study confirming the potential for a new long-life gold project with forecast average production of 135,000 ounces per annum at an all-in sustaining cost of $12.20 per ounce, and it's now in the midst of a definitive feasibility study. Just last week, Bardoc announced a transformational capital raising underpinned by a number of leading Australian and international institutional and strategic investors. This landmark raising is one of the most important in the company's history, significantly de-risking the company's pathway to production and putting it in an enviable position to fast-track completion of the DFS and mining studies while simultaneously accelerating exploration aimed at growing its resource base. This morning, Bardoc CEO Rob Ryan is going to run you through this capital raise, explain why it is so important to the company's future, and also give an overview of what the company is planning to do with the additional capital and what investors can look forward to in the coming months. Before we begin, can I please remind all attendees that you are in a listen-only mode this morning. If you would like to ask a question of Rob, please use the Q&A tab in the right top-hand corner of your screen and type your question in. Once Rob has finished his presentation, which will run for around 15 to 20 minutes, I will endeavour to put all of your questions to him to answer. And finally, a recording of the webinar will be available later today, and we'll provide further details about that at the conclusion. It now gives me great pleasure to introduce Bardoc Gold CEO Robert Ryan to run you through the Bardoc story. Welcome, Rob, and thanks very much for joining us this morning.
Thanks very much for the warm introduction, Nicholas, and it's a pleasure to be here to inform our investors of what's happened over the last few weeks, and it really has been quite a busy few weeks at Bardoc Gold. As a bit of a summary, we're located 40 kilometres north of Kalgoorlie. As Nicholas said, we've got a pre-feasibility study that illustrates we've got a project of around 135,000 ounces per annum, Preproduction Capex about $140 million, and all-in sustaining costs of $1,220 an ounce. We've got a number of near-term catalysts for a re-rating, so we're re-optimising our open pits as we speak, focusing on both underground and open pit opportunities at a higher gold price of $2,000 Australian an ounce. We're having a look at gold concentrate offtake arrangements. We're going through a MET report at the moment, and we've been out to request for pricing to over 25 different groups as part of offtake arrangements. We expect for that negotiation to occur over the coming months, and around Q4 this year, entering into a binding offtake arrangement for our Aphrodite project. The definitive feasibility study is due in Q1 2021, and we are spending about $3 to $4 million or more on exploration moving forward. So the idea will be is that will focus over the next 12 months of really trying to shift the needle in terms of where the additional resources can add to our portfolio. We're in a tier 1 mining jurisdiction in Kalgoorlie. There's no better place to be building a gold mine. And after living there for 18 years, I may seem biased, but it is a fantastic area and a really prospective area for gold. We're a near-term production potential. We're looking at starting mining Q3 next year with first gold production in 2022. We now have over $35 million cash in the bank and a strong shareholder register now with a number of global institutions on board that are looking to help fund the project all the way into production. And when you start looking at the gold industry, there's no better industry to be in at this point in time with the amount of global unrest and really the overinflation in a lot of the equity markets. What we start to see now is a situation where gold and the forecast for gold will look to accelerate for a number of years. When we have a look at the situation on the shareholder registry post-raise, we'll have about 1.7 billion shares on issue of that. That gives us a market capitalisation around $170 million with $35 million in the bank. So we're about $140 million enterprise value, which is exceptionally cheap when you consider that we've got 3 million ounces in resource. As you said, post-raising, we'll have about 20% of our register will have institutional holdings. That is a significant shift in the company dynamic over the last few months. If we go back prior to this raising, our shareholder registry was largely retail and quite volatile in areas in times of uncertainty. And what we've seen now with the institutional investors coming on board, I have no doubt that people will start to see the influence that will have on our share price in the weeks and months coming forward. So Bardoc's come together through an amalgamation of different companies. So Excelsior Gold initially began the consolidation about 10 years ago. The area north of Paddington, they acquired a number of leases. They built together a strong portfolio of projects. And through exploration success, they announced a resource of about 1.7 million ounces. They went into a mining production campaign. At that time, they were toll treating at the Paddington operations, and I at that time, was the general manager of tech services at Paddington. As soon as they started production, they ran into issues. The ore body under-reconciled about 20–30%. And at that point in time, they did a number of capital raisings, diluted down their shareholders, and it got to a situation where they came under a 249D, and Rowan Johnson came into the company. Rowan Johnson turned the company around. At that point in time, they were $30 million in debt. He restructured all the resources, and he brought across a resource geologist from his Integra mining days. They cut the resources from 1.4 million ounces to about 800,000 ounces. That campaign and the mining campaign, Rowan managed to pay down $30 million worth of debt and get the company $10 million cash positive. So it was a dramatic turnaround from a company. Now, at that point in time, they went back into exploration. Neil Biddle and John Young had just acquired the Aphrodite gold project through a merger with Spitfire Materials. The conversations between Excelsior and Aphrodite and Spitfire, then discussed around a merger in around 2018. And by the end of 2018, they'd merged an entity now with about 2.5 million ounces in resource. So that gave the company scale and the ability to really be able to look at building a project in its own right. And when you look at the location of the project, 40 kilometres north of Kalgoorlie, it's close to infrastructure, residential workforce, power, water, and there's really no better place to be building a gold mine. And throughout 2019, when I joined the company in about May, we've worked on further consolidating our footprint within the area, as also adding low-cost complementary acquisitions. We picked up the North Kanowna Star Mayday projects, which I'd been well aware for a number of years. We brought those projects in, and they have immense exploration potential, which I'll run through later in the presentation. We also picked up the Veddisberg gold mine, which was one of the highest grade, historically highest grade and highest producing mines on the Bardoc goldfield, but really hasn't had any significant exploration conducted at the project since the early 1900s. So we're quite excited about this prospect. We're going through a lot of the old mine plans now and really trying to reorientate and understand where the old timers are mining. And I think once we get through that process, we'll have a look at really attacking that in the exploration and potentially finding some new prospects there. But the project itself, when we start having a look at Aphrodite, it's a greenfield style project. It was discovered in 1994 by Gold Fields, and the first real resource was announced in 2005 by Placer Dome then on-sold the project to Apex, And through a series of mergers and acquisitions, it wound up with Aphrodite Gold, and then Aphrodite Gold was vended into Spitfire Materials in 2017. What we have here is 1.7 million ounces in resource, and there's a significant opportunity to continue to grow this deposit. Our mining study mainly focuses on alpha and phi lodes, and we have about 500,000 ounces of mining reserve here at the moment. But what we see is further to the south, there's repetitions of these lodes with the omega lodes, the sigma lodes, and the like. And all of these lodes are still open and at strike and at depth and have the immense potential to grow. And what we have had with our announcement yesterday is 37 meters at 6.2 grams in the omega lode, which sits just outside of the mining reserve and continues to show that really this prospect still has a lot to give. Even though we've got 500,000 ounces of mining reserve, which will probably give us 5 to 6 years worth of mine life, I believe that once we get here and we begin mining and we continue, after 5 to 6 years, we'll probably be saying we've got another 5 to 6 years worth of mine life. So there's a lot of opportunity here at Aphrodite. And Zoroastrian is a bit more well known. It's been mined in a number of mining campaigns. First of all, in the sort of 1890s and 1900s. We then, Aberfoyle mined an open pit there in the mid-80s. And again, Excelsior mined an open pit in 2016-17. It was when the companies merged between Spitfire and Excelsior Gold. There's been a significant development in the understanding of the geology within the Zoroastrian project. We came up with a fractionated dolerite theory. We drilled and we tested it, and we had tremendous exploration success last year. We expanded the resource. We've then had a look at the underground mine design and got an underground mining reserve, and we've had a look at further infilling that reserve. And when we quote an underground resource here of about 4.5 grams a tonne, what we have seen in our infilling results are significantly higher grades and significantly wider intercepts than what is modelled in the resource. So as you can see, the infill drilling results, 7 metres at 21 grams, 13 metres at 6.8, 6 metres at 7, and 11 metres at 5. And when you consider that we take that resource and we dilute it down to an overall underground reserve grade of about 3.2, I think we'll start to see significant upside once we get into mining this deposit. And not only that, when you talk about a lot of the issues in and amongst the mining industry over the last few years, companies haven't been able to hit their targeted grade profile. We are quite conservative in the way we do our geological modelling, and as you can see by the evidence of our infill drilling results, I've got no doubt that once we get and we start mining these deposits and we get into production, we'll no doubt achieve the grade we say we're going to achieve, but in all likelihood, we'll overachieve on our targets. When we start having a look at Zoroastrian as a broader open pit scenario, though, we really focused on the underground when we looked at the pre-feasibility study. And we had a small open pit, maybe about 20,000 ounces. That was an old design from 2017 that we used as part of our pre-feasibility study. The underground was the main focus because we thought we wanted to get that balance between high grade and low grade in the production plan. But we've conducted a number of optimization studies post-underground mining. And what we see is a significant amount of resource here that is still available for open pit mining, post-underground mining. So we'll have a look at doing a number of studies in the coming months, a trade-off between underground and open pit mining, and really look to increase the reserves here at Zoroastrian. The Excelsior project was mined in the mid-1980s by Aberfoyle as well. Now, one of the big things about this project, and it really highlights the conservatism that gets put into our resource modelling. The previous owners at Excelsior Gold used to quote an open pit resource here of about 475,000 ounces. What we see here now is an open pit resource about 320,000 ounces. Bardoc has already been through the process of going through what we call a diluted mining model, an LUC style model. An LUC style model is effectively a mining model where it takes a bigger block, it dilutes down the grade, and you tend to get more tonnes, lower grade, less ounces than compared to some of your other modelling techniques. When you have a look at a number of companies are starting to move towards these mining models, once they're into production, or even while they're doing their feasibility studies and the like, Bardoc has been utilising this modelling technique for a number of years. We utilise it at Zoroastrian, we utilise it at Excelsior, and we utilise it at Aphrodite. So this conservative modelling technique means that, with confidence, we can go into a mining plan and produce what we say we're going to produce. Mayday North is an exceptional exploration opportunity. We've had some great success here through Christmas and into the new year as well. And what we have seen is there's a 10 to 15 metre wide, very homogeneous ore zone running at about 3 to 3.5 grams a tonne. You don't tend to see many homogeneous ore zones like that. We'll continue to have a look in and around the area. When we start looking at some of the geophysics, there does seem to be some repetitions or potential repetitions of the Mayday deposit in and around on the project. So we'll continue to focus our exploration activities and really try to hone in on where a substantial resource upgrade could be at the project. And North Kanowna Stars, very early stages, but again, it's very exciting for us. We initially liked the project because it was about 20 to 30,000 ounces here in a small open pit resource that was near surface. All the drilling in the past had targeted the supergene mineralisation. And, we believe we'd probably get around 15 to 20,000 ounces in a small open pit. However, when we did the first drilling campaign into the fresh rock, what we have started to see is significant broad alteration halos. So when we use a lower grade cutoff, like a 0.2 of a gram cutoff, we were getting between 40 and 60 metres of continuous alteration within those drillings. And we had 11 holes here. Every single hole hit mineralisation. It was a large anomalous gold system. And what we have seen, really, it doesn't, when we start looking at other projects within our portfolio, we probably only liken it to somewhere like Aphrodite. So for us, it's still very early stages. We want to do a bit more geophysics work around here and really target where the high grade zones could be. But it is a large anomalous gold system. We do see a lot of potential in this area. When we look at the production scenario, our processing flow sheet's been simplified. We wanted to reduce the risk of the project. And when you start looking at refractory deposits, a lot of people look down a BIOX process or a POX process or even the Albion process. A lot of these processes are high capex. Really, they do contain a lot of high technical risk as well, because if you don't get your grind sizes, your pressures, or even your leaching techniques right, you can have a lot of risk in achieving the recoveries you say you're going to achieve. What we've considered is producing a flotation concentrate. The benefit you have at Aphrodite is get a very high grade gold concentrate. When you start looking at our gold con, it'll range between 60 and 90 grams a tonne, low deleterious elements. And when we've been talking to a number of off-takers, there are significant payabilities that will occur on you that you can get for your gold concentrate. It is quite a burgeoning market at the moment. There is a lot of demand, and as you can tell with our request for pricing, we've gone out to over 25 different groups. And that really shows how much demand there is in that space for quality gold concentrates like will be produced at Bardoc. And it isn't a new process. It's a well-trodden path in a lot of the world and even in Australia. And Evolution Mining, it probably one of the shining lights in the Australian gold mining game. And really one of their jewels in the crown was Mount Carlton. That's been in production since 2013, producing a gold copper concentrate and shipping that overseas. And before they came up with a methodology of producing a gold concentrate, no one believed Mount Carlton was going to be able to get up off the ground as really a profitable project. And Evolution have shown that, producing over 100,000 ounces per annum for over 7 years at a low all-in sustaining cost an ounce, they've been really a one of the first movers in this space and shown that it can be done successfully and can be done over a long period of time. Mandalay Resources are a TXX listed company, and they're a much smaller scale, and they'll produce a gold antimony con. They produce about 20,000 ounces per annum, so about 5 to 10,000 tonnes of concentrate, and they're at the lower end of the scale. So what you can see is you've got companies that can do this over a long period of time, that can do it in very small quantities or even very large quantities, similar to Evolution. Diversified Minerals with the Dargues Gold Mine have been a very interesting test case for us because we've been speaking with Dargues, and they have a concentrate offtake with one of their traders, and they get significant high payabilities. And the benefits that we see and the correlations we see is we produce a very similar spec concentrate. It's high grade. Their concentrate runs between 60 and 90 grams a tonne. They get really high payabilities, better than what you'd get if you were to put in a leaching circuit. And for us, we see it as a key de-risking process for the project. And the project itself is 7.8 years mine life, about 7 years production, mill production. We have 1.8 million tonne per annum plant, producing a life of mine about 1 million ounces, and about 800,000 ounces of that is in the indicated resource. So we have a high confidence mining plan. What we see here, with the confidence we have in the mining plan, 800,000 ounces, we've been able to generate a debt model and how the project will look from a debt financing point of view. Bernvois Corporate Finance have been involved with the company since about January, prior to the release of the PFS. They're experts in debt financing. They've had a look at the project. They've modelled it as a bank would, and they believe the project would support a 5-year loan tenure based on current resource. That's before any of our infill drilling and before any of our reserve updates we're planning over the next few months. What that's given us the confidence to do is really look at this from a debt financing point of view. And at a 60-40 debt equity split, we'd be able to support a 5-year loan tenure at a servicing ratio of about 2.4 to 2.6. As soon as you start talking about a 70% debt equity ratio, we start looking at a debt servicing ratio above 2 still. Now, standard bank debt financing arrangements have that servicing ratio around 2.0. So for us, we don't see any major hindrances in getting the financing for the project on a debt perspective. And now with the institutional involvement in our register, we're confident on the equity raising portion of the project as well. And when we start having a look at the operation in the current gold market, we did our space study about $1,450 an ounce. As soon as you start looking at the current gold price and the current gold market, it presents exceptional value. We have a project here that'll generate between 400 to 500 million post-tax NPV and have an IRR between 45 and 55%. So it's an exceptional value in what is a rising gold market. Now, why did we do the equity raising? And really, this is the situation we're in. We had $11 million in the bank. We were well funded through to the end of the DFS. However, when we start looking at the makeup of that registry, we really needed to get confidence within the wider institutional market that we'd be able to raise the equity to build the project. For us, getting that institutional involvement and really getting that support within the share price is the best thing for all of our investors. And what we've seen now is we've been able to take our institutional involvement in our register from less than 1% to over nearly 20%. And what we'll see is over the coming months as people begin to follow their investment into it. And we've been selective in the groups we've brought on board. We've gone out to the market and really had a look at who are going to be the best people to follow their money into a larger equity raise. And there was a lot of institutional investors come on board and made the comment that they'll be there for a smaller participation within this raising, but they'll follow their money to whether it's 2 to 3 times their investment as we look into the larger equity raise to build the project. So that gives us the confidence to be able to progress forward and really push forward with a lot of the long lead items and get this project into production as soon as we can. The main use of the funds, as I said, we'll have about 3 to 4, up to $5 million in a 40,000 metre exploration program. That's really going to target the new additions to our resource. That program will be kicking off in the next few weeks. We're not going to see a significant impact to our resource statement as we progress into Q3, because the focus has been improving the confidence within our current resource. As we start having a look at some of the long lead items that we want to focus on over the next coming months, we've got front-end engineering design for the processing plant. There's a road and rail design, as well as some early stage key infrastructure works to do with power and water and the like. And we also have some extra working capital. And we've got the ability now, if there's opportunities to take advantage of a process that's going to help bring forward production earlier, we're well funded to be able to do that. So our key milestones moving forward, we'll have our resource update later this quarter. As I said, that resource update has always been targeting the confidence update, trying to convert as much of that 1 million ounce mine plan to mining reserve as possible. As we start looking at our exploration drilling, it's a 12-month program we've planned out, and that is really going to focus on where that additional resources and reserve is going to come from. The concentrate offtake arrangement, met test work will finish sometime around September, October. That'll correlate well with our offtaker shortlisting. As I said, we've been out to 25 different names. We'll whittle that down to 5 or 6 different groups that we'll look to get into detailed discussions with in and around a final binding offtake arrangement. The environmental permitting, we don't see any major issues here. We're in an area that's been previously mined. There's a tailings dam already in place at Excelsior and Zoroastrian. And Aphrodite, even though it is a greenfield style project, we have all the environmental surveys, heritage surveys, and the like completed, ready for mining proposal. So we'll do our mining proposals now. We'll get those submitted in the coming weeks. And I think there will be no major hindrances in environmental approval. Our key focus moving forward is our definitive feasibility study, and that's really going to be the main focus over the coming months. And when we start having a look at the discovery, we really want to make sure that there is a strong pipeline of growth projects for the operation. We don't want to have a look at a project that's going to last for 7 years or 8 years or 9 years. We want to have that pipeline of projects to feed into a long life operation that's going to set Bardoc up to be a mid-tier gold producer for well over a decade. And when we start looking at the location of the Bardoc gold mill, it's in a very strategic location. The mill will be located right next to the Goldfields Highway, which really is the main artery to the northern goldfields. And when we start having a look at the Bardoc mill, there won't be another operating mill heading north until you hit Leonora. So there is a 200-kilometre stretch of highly prospective gold belt that really doesn't have a processing opportunity. And there's a number of really quality projects there that don't have the scale to do anything in their own right. So for us, whether it's a toll treatment arrangement or whether it's an M&A target in the future, there is a lot of opportunity for us as we look to really leverage off our location. And when we have a look at Bardoc and the way it's come together with the mergers and acquisitions, people have been focusing on, well, what do these two projects look like? And are they really going to be able to make it work as a pre-feasibility study? When we released our pre-feasibility study, it was in the midst of the COVID-19 crisis. So we really haven't seen the re-rating that really should have happened of what is a quality pre-feasibility document. So what we start to see now, there's a lot of opportunity for investors to start taking advantage of where Bardoc sits. And as we start progressing through that DFS and hit some of those key de-risking milestones, I think you'll see an exponential growth in the share price as we start moving forward. And when you have a look at our EV per reserve ounce, we're much lower than all of our peers. If you start considering that we want to convert as much of that 1 million ounce mine plan to mining reserve as possible, that valuation then reduces again. So there's significant opportunity for investors to really come on board and take advantage of what is a suppressed share price for Bardoc. So key takeaways, look, it is the best jurisdiction to build a mine in. As I said, I may be biased by living in Kalgoorlie for the last 18 years, but there is no better place to build a gold mine than Kalgoorlie. Close to road, rail, power, water, all the infrastructure you need, residential workforce, and a supportive mining community. We have a large and growing resource base with 3 million ounces at present, and we've got significant brownfields and greenfields opportunities. We have nearly 800,000 ounces of mining reserve, and as we look to convert as much of that million ounce mine plan to reserve as possible, as we start progressing into our definitive feasibility study, there's significant growth there and valuation growth in the project. And we've got a strong board and management team that has been here and done it before. So with the group from Pilbara Minerals, Tony Leibowitz, John Young and Neil Biddle, they had tremendous success with Pilbara Minerals, taking the project all the way through feasibility and into financing, construction, and into eventually into production. What we have additional to that is Rowan Johnson, who's got the battle hardened and the experience necessary to understand what it takes to operate a gold mine in trying circumstances and really turn operations around. My experience, I was general manager of the Paddington operations to the south for a few years before joining Bardoc. And what we have is local knowledge. We've built a team around us of people with significant experience within the Kalgoorlie region and with significant experience in managing and running mines and mining operations with really tier one companies. So for us, we've built together what is a great team, a great project, and really a great investment opportunity for everyone. Thank you very much. I'll hand over to Nicholas and we'll go through any questions.
Come in from investors and shareholders, and we'll dive straight in and work through them. Just a reminder to everyone before we do so that if you do have a question, please use the Q&A tab and just write it in, and we'll put it to Rob. Rob, I'm going to start off with a question that a lot of shareholders have asked over the last week, and it's come in again this morning from a number of people. I know you did touch on it, but can you just explain for the retail investors your decision to do a placement only as opposed to a rights issue or SPP or some other structure? And a couple of investors have asked this morning, is there any intention of a follow-on or SPP for retail investors, or could there be an issuance as development progresses?
Yes, unfortunately we couldn't issue a SPP because we completed our SPP towards the back end of last year. We're only allowed to do one per year as per the ASX guidelines. But when we start having a look at the idea, and why we focus predominantly on the institutional investment, was really because we had zero involvement on institutions on the register. We wanted to build that out and get a strong base. We've done a number of retail raisings over the past few years, and we're quite wary that we keep on tapping the same market for funds all the time, and getting the institutions on board really gives us the potential to drive and take the next step as a company. Now, when we start having a look at what we're going to do in the future, as we start going down that production equity path, there's no doubt we'll present all of our investors the opportunity to be able to invest as part of what will be the equity piece to build the mine.
Fantastic. Thanks, Rob. Next question, an investor has asked, and again, I know you did touch on this in your presentation, but can you just explain the reasons for the need to produce a gold concentrate as opposed to the conventional processing route, and what is the difference in terms of net payable of that approach?
Yeah, so it's a very interesting market, and it's something that I've looked at for a number of years. So I initially looked at it when I was at Paddington, and again, when I looked at the concentrate specs at Aphrodite, and I've seen the potential there, I've been focused over the last 12 months or so, really trying to get a broader understanding of the market and really try to, just have numerous discussions and with traders and the like, and find out the best pathway. What we have here is that you get quoted on payabilities anywhere from about 90 to 95% gold payable in concentrate. And when you start having a look at, when we were looking at the Albion process or something along those lines, your gold recovery from the concentrate was probably about the 92 to 93% anyway. So it really didn't make sense to go down what is a high technical risk process with any of these refractory processing plants, and what is going to be quite a high capex risk to the project. So, we take that all the way, and for quite similar operating costs, we'll get significant payabilities, as I said, somewhere between that 90 to 95%.
Great. And I guess a follow-up question to that, an investor's asked, how transparent is the market price for gold concentrate, and is it pegged to the spot price?
Oh, look, I guess it's the market price of the gold concentrate. It's not overly advertised because it depends a lot on where the concentrate goes. There are various processing methods. There are people who will produce anything from what they call your dirtier style cons with high arsenic concentrations and the like, or they may have other deleterious elements like carbon or something else associated with the con. What we have at Aphrodite is a relatively clean gold concentrate. It runs about 3 to 4% or 2 to 4% arsenic, which is very much at the lower end of the scale. A lot of con off-takers will start applying penalties once you get over 5% arsenic in concentrate. So for us, we produce a really clean concentrate. There's strong demand for it, and it's high grade. A lot of lower grade concentrates that get produced get a lot lower payabilities. So I guess it isn't as cut and dry as just putting one up against the other.
Thanks, Rob. So turning now to a question about the economics of the project, an investor's asked, is the life of mine 7.8 years as outlined in the PFS? Sub 10 years, is that bankable, or is it bankable using the gold concentrate route?
Yeah, 100%. And what we have found is with our debt financing model that we've built, our project will support a 5-year loan tenor based on the current resource and reserve, so before any upgrades. For us, we've got a payback period of around 2 years at current gold prices, or sub 2 years at current gold prices. So we've got no major issues in being able to finance the project, being able to get the debt financing, and then being able to service that debt effectively over a long period of time.
Great. I'm going to go to another question related to the PFS. An investor has asked, the PFS has 211 million in post-production capex. In your financial model, is this amount included in the all-in sustaining costs, which average 12.20 per ounce?
No, there's a section of those costs that aren't included on the because they're non-sustaining costs. So when you start having a look at building the plant and the like, and a lot of that key infrastructure of building that infrastructure, those costs aren't included in your all-in sustaining costs.
Excellent. Okay, and then another sort of related question, could you please elaborate on the capex estimate and plans for financing the project?
Yeah, so when we start having a look at the capex, to build a mill around about that 2 million tonne per annum, you'll need between $70 and $80 million in capital to build that mill. We then have around 30 million in open pit mining costs prior to production, and then there's about $20 million involved in moving a road and rail. There are also probably another $15 to $20 million in other site key infrastructure, like tailings dams and pipelines and the like. So when we start having a look at the total pre-production capex, it's that 140 million, and it's a combination of all of those.
Great, thanks, Rob. Another PFS-related question. How much metallurgical work underpins the 93% recovery figure used in the PFS?
Yes, so there's been a significant amount of work. When we start having a look at our projects like Excelsior and Zoroastrian, we have a processing history of those projects. We also have multiple test work results that we're able to leverage off both historical, as well as we're doing some more now. With Aphrodite, there has been a number of different studies done, but it's mainly been focusing in and around producing a gold concentrate for further oxidization, and whether that was through a BIOX process or Albion process or a POX process. What we've focused on producing a concentrate, we've done a number of marketable spec works over the last 12 months for the pre-feasibility study. When we start having a look at transitioning from a PFS level study to a DFS level study, we've invested heavily in a metallurgical test work. So we've invested around $3 to $4 million in drilling at Aphrodite to ensure that we've got the variability test work to produce a marketable gold con that tests different weathering profiles, lithologies, as well as different high grade and low grade sections of the ore zone. So we're making sure we're putting as much effort into that concentrate model as what we can. So there's surety once we go into the DFS that we can really focus on producing the concentrate we say we're going to produce exactly in line with the same methodology we take with all of our projects. Is we want to make sure that when we put a plan in place that it's going to be there and we're going to say what we're going to achieve.
Fantastic. Questions still coming in thick and fast. A couple of investors have asked, do you have any intentions or have you considered the possibility of a share capital consolidation given the number of shares now on issue?
We haven't had a look at that in the short term, but obviously with 1.7 billion shares on issue, in the future that may be something we discuss a bit further, but we haven't put any plans in place at this point in time.
Okay. Another investor's asked, can you elaborate on how much skin in the game board and management have, rough percentages of shareholdings?
Yeah, so the board holds about 10% of the company. After the last raise, was previously about 11%. It's just under 10% now. With management and the like, we're all well incentivized and well invested within the company as well.
Fantastic. Another question that's just come in. What is the expected impact of COVID-19 on project safety, schedules and budgets?
I think the big thing around COVID-19 is it's probably affected more of your current producers more so than some of your developers. We have seen some issues around getting consultants and the like early in the process, but in Western Australia, we are blessed that really we're able to move around quite freely now, and we haven't felt the impact of COVID-19 as maybe some of the other states have as much. So I guess the big thing is for us, we just need to focus on pushing through our definitive feasibility study. There's been very minimal impact of COVID-19 for us, and we'll focus on that as we transition into production. Really around the safety management of how we'll focus around, promoting bigger workforces and how you maintain the issues associated with, viruses and diseases moving forward potentially in the future.
Thanks, Rob. I've got a couple of similar questions, so I'm going to combine them. One investor said, emerging projects often sound great, but can become disappointing once production starts, and he mentions a couple of recent examples. And I guess a sort of related question from another investor, what do you see as the major risk or pain points before getting into production?
Yeah, I guess the big thing that, and I wanted to highlight that specifically within the presentation, that as a company, Bardoc has, in its earlier years with Excelsior and the like, it shows the scars of, you know, what has also happened in some of the junior end of the industry in the past few years. So the team here is well aware, you know, of the successes and failures of a lot of companies in the Australian mining game. But what we've put together is a conservative plan. We always build conservatism into our plans. We're miners. We, you know, with Ron Johnson, myself, our study manager, we're all operators. We understand mining. We know how to manage operations. We know how to achieve our targets, and we always set out to do that. That is the key component that when we start looking at, you know, what we are going to do with the project is really build that conservatism in it. So we not only achieve what we say we're going to achieve, but we have every ability to be able to overachieve on our plan.
Excellent, good answer. Another investor's asked, will your debt lender require Bardoc to take out gold hedging?
A lot of debt lenders tend to make companies hedge a section of their gold production. It's something that we'll consider once we start having deeper discussions with financiers in the coming weeks and in the coming months as we look to get financing for the project. At this point in time, we have allowed for a certain amount of hedging to be completed within our financial modelling, but we'll have a look at that in the future. And look, there's probably not too much risk at the moment if you start having a look at gold prices in excess of $2,500, $2,600 an ounce.
Another question that stems from the PFS and the financials, Rob, an investor has asked, does the 15 million for long lead items allocated out of the current capital raise directly reduce the PFS pre-production capex of 142 million to 127 million?
That'll be the intention, to focus that $15 million on items that are really going to start to push that pre-production capex number. You know, the whole idea of this equity raising was to get that foot in the door and start a lot of those pre-production works. Okay,
great. Another question, what offtake strategies is the company currently looking for? Will there be an upfront payment and hedging associated with that?
There's a lot to take into consideration with that. Generally, when you start looking at upfront payments as well as you know, potential of financing arrangements, what tends to happen is your payabilities reduce quite significantly with a lot of your traders because they take risk on two fronts rather than one front. So for us, we want to focus more so on getting standard bank debt and financing arrangements for the project. We know we can get significant equity already from our current shareholder base as well as new institutions on board. So we want to keep the two quite separate so we can still get the best prices as we can from our off-takers, but make sure that we really focus on financing the project outside of that arrangement.
Fantastic, Rob. I've got one more nice wrap-up question, which is a nice broad one, just to end on. How confident are you that you will be able to grow Bardoc into a mid-tier gold producer, and what's the time frame that you've placed on that process?
Look, the big thing for us is I'm 100% confident that we can take this project into production. In the current gold market, the project has exceptional financial metrics. So when we start having a look at Bardoc as a project, I've no doubt we'll make it a success. When we start having a look at our first gold production in 2022, really that's the tip of the iceberg, because we do have a highly driven and a highly successful team here. We've built out the management team with a good group of individuals with strong knowledge of operating mines and getting the best out of mining operations. So I think for us, we really want to focus on getting Bardoc up and running, and if there is opportunity to continue to grow the business, we'll attack that with vigour.
Fantastic, Rob. Look, thanks very much. We've had some great questions from a very engaged audience this morning, so I just like to thank everyone very much for dialing in and participating and for your questions. It's been fantastic. And a big thank you to Rob as well for your time this morning. A great presentation and very clear that Bardoc is a company on the move, lots of news flow in the coming months, and a stock to watch for sure in the emerging gold space. So look, thank you very much. A reminder that a recording of this webinar will be available later today. We'll release that via email to everyone who registered, and we will also release a link to the recording through the ASX platform. So if anyone who wants to watch it again or might have missed it, you're welcome to access it that way. So thanks again. Thank you to Rob this morning and to Bardoc Gold. Thanks for your participation, and we'll be in touch with our next event. Have a great day. Thank you.